afternoon, everybody. Thank you for joining us here at AusCryptoCon for day 2. My name is Noami Policar. I'm the head of marketing for Protocol Theory. I see some familiar faces in the crowd, so thank you so much for those coming in. We are joined by some really incredible people here on the panel. Sorry, can you guys? I'm sorry, I just hear some echo. On the stage here, our panel today is titled From Tokens to Transactions, how stablecoins and crypto credit are reshaping finance. I'd like to welcome Tommy Honan, Director of Product from SwiftX, sitting on the third there. Rachael Jones, Operations Lead at AUDD and founder of Center and for Digital Economics Analysis. Dimitri Angelis, Director of Corporate Development at Ledn, and Jonathan Inglis, CEO of Protocol Theory. A round of applause for our panelists, please. Okay, so today, also, sorry, I forgot to introduce my fourth panelist. His name is Flanagan, and he is a duckling that is sitting on my glasses. I don't think anybody can see him, but camera, please zoom in. I hope that, the recording can see him. So today the focus is on real consumer behavior. How stablecoins and crypto-backed credit are showing up in payments, cross-border activity, small business usage, and practical financial decisions. We want to look at past speculation and talk about real utility that we're seeing on the ground and what might shape the next stage of adoption. So, segment 1, current consumer behavior. What stands out most in the way consumers are using stablecoins or crypto credit today? Might start with maybe Dimitri, get some of your thoughts on that.
Hi, everyone. Thanks for coming. It's interesting because I think Australia has been a really interesting market in the way that people view assets, and a lot of our consumers that are based in Australia have kind of started to adopt the view of Bitcoin almost in a way as being drawing parallels to gold and as a store of value. And growing up in Australia myself, I've seen the dream as growing up and owning a house, and this being asset rich and in a way kind of cash poor. What we've observed over time is to see how people can basically keep their exposure to assets, but also be able to be liquid. And I think it's been interesting to see this maturity in the market of other parallels and to be able to diversify, whether that's gold, whether that's property, but also to see Bitcoin as an opportunity for expansion, but also to be able to draw liquidity from it without being able to sell the asset. So I think despite what some people might say, I personally have seen Australian market to be very comparable on the world stage, and I think people ask the right questions, they are curious, and they're not easily fooled on the market. So I think there's a lot of opportunity in Australia, and you can see that from the amazing conference that's been done here.
I agree. I do like the sentiment about owning a house in Australia. I absolutely feel that too. I might throw to Tommy, actually, to think about, give us some points on that. So the question was, what stands out the most in the way consumers are using stablecoins or crypto credit today?
Yeah, I think the consumer behaviors are changing rapidly. Like we see it on the exchange side. A couple of years ago, our customers would come in. They're only thinking about trading. Nowadays, they're thinking about utility. So I think that's the big shift that we're seeing on the SwiftX side. They're coming in, they want to do something with their crypto. They don't want to just trade it or hold it in their wallet long term. They're looking at things like payments. They're thinking at things like lending. They want to. They're talking to us about drawing down cash against their crypto, and these are all products that we're actively developing at the moment. The spending one is really interesting. There's a lot of products out there that will allow you to spend your Bitcoin or spend your crypto. Me being a bit more crypto native, I never want to spend my Bitcoin, so I think the credit element is actually really where the opportunity is, and our customers are kind of have been quite receptive to that so far. We don't have any products live yet in that space, but it's something that we are actively building into. It's something that we're doing a lot of experimentation across. So, for example, we built a experiment on the front end where our customers would come in and like an expression of interest, but would actually commit to skin in the game for putting up their Bitcoin as collateral for a loan, for example. We've done similar things with payment cards. So you could use, you could spin up essentially like a SwiftX credit card and earn Bitcoin rewards back on your spending. So, debt of Qantas points eventually. I don't think that's going to happen, but I think that's the kind of opportunity area that we're looking at, and the consumers are expecting more and more and more from just your standard crypto exchange these days.
I like that. That definitely sounds like the next kind of product step. Might stay on you for a second, Tommy, because the next one is, what user behavior or pattern has surprised you recently?
I think the growth of stablecoins, I think people are asking a lot more questions about stablecoins these days. To draw some comparison, Jonathan might have some stats on the cuff around stablecoin usage and the comparison that's often put out in media about MasterCard flows and Visa flows and the whole stablecoin adoption. They've clearly got that product market fit. So we're seeing our users think about stablecoins from payments. I know Rachel will have plenty to say about that when she speaks. That's probably one key area, I think, and what I've mentioned previously around the spending behaviors and having those everyday use cases, that's really where we see it going. It's more of a financial ecosystem, building a financial ecosystem as opposed to a place just to go and trade.
Yeah, that's awesome. I think I will throw to Jonathan, probably, because Tommy mentioned some stats about stablecoins.
Is it on? You can hear me? Yeah. I was going to preface my responses by saying, I guess we're in the business of consumer research and consumer insight, so apologies, I'm probably just going to throw random stats at you guys, but I hope they're interesting. I want to probably just take a step back for a second and take a bit more of a macro view before getting into the nuances of specific use cases. But like, how big is this market they're actually talking about? How widely used are stablecoins in the context of like crypto more generally? Here's some quick stats, right? So about 21% of Australian adults currently own cryptocurrency. That fluctuates with sentiment and obviously over time, but a steady baseline around about 21% over the last 12 months. Across APAC more generally, so all of Asia Pacific, that number is about 24%. Most of that is driven by emerging markets where crypto adoption tends to be much higher. So among these crypto users, how widely used are stablecoins? About 70%. This is obviously it varies by market, but on average across Asia Pacific and including in Australia, about 70% of crypto users have either own, use, or have interacted with stablecoins in some way. So about 4.5 million Australian adults, 70% of that, whatever that number is, thereabouts use stablecoins here in Australia. What's really interesting though is when you look a little bit more deeply, like how are they using it, why are they using it, and how frequently are they using it? A stat that surprised us, so we did some research recently with CoinDesk. It was published, it was the last week, I believe, the 2025 Digital Asset Adoption Report across APAC. What we found in that report was that of those that use stablecoins, of the 70% of crypto users that use stablecoins, about 2/3 of them use them as frequently as traditional everyday banking. They use them at least weekly. So those that do adopt and use quite extensively, quite frequently. Again, use cases vary, and I'm sure we'll get into that in another question, but we're talking about a massive market. Across APAC, it's about 330 million, I think, people use stablecoins regularly. So it's a massive market, and there's still significant potential for this market to grow. So.
Yeah, okay. That's really, really cool. I'm going to take that segue and pull in Rachel here because I feel like, I've chatted to you about even the CBDC movement and how passionate you are about that too. And surpassing that $1 billion usage, it's exciting. So what are your thoughts with stablecoin usage and as well consumer behavior? Maybe even also what motivates people to use stablecoins and digital credit tools?
Yeah, I guess what I would say is that we've seen incredible change in a really short amount of time. So, for example, we've just crossed $1 billion in volume on Stellar AUDD. We're on 7 different chains. But I love that basically their point is that once a consumer comes on board, they start utilizing it, they see the efficiency and they see the kind of impact. They tend to stay in the ecosystem. And not only that, from a company perspective and a supply chain perspective, what we're seeing is that one company will come on board, they'll start using the rails, and then it's a bit of a flow-on effect because it's quite attractive from an efficiency standpoint, right? So you're saving time, you're saving money, it's more secure. So we're just seeing, I think, that exponential aspect to the growth here. The other thing, which it has been quite unusual this year and has been really good, is that oftentimes within the industry it's a bit of a silo. But what we're finding now is that companies outside of the industry, so you can talk completely different, a part of the economy, are recognizing that this is a really nice mechanism and that intimidation level has really decreased. But a lot of it's been driven, I think, from the utility, right? It's all about the utility. A lot of the research, I loved actually, Jonathan, was on the framing of it, which was that there's a behavior infrastructure change. And I think that behavior infrastructure is there now, which is why we're seeing such huge volume increases. And of course, people like Tommy building the product and kind of getting the utility out there to consumers.
No, go for it.
I love the point around more companies outside of crypto starting to get into the space and integrate. A key theme that we've seen in the last 12 months is, I guess, if I could summarize it in a word, would be integration. And by that I mean integration between digital assets, cryptocurrencies, and DeFi with TradFi and traditional finance. Again, I'm so sorry, I'm going to throw some stats at you, but across Asia Pacific, right, when we surveyed over 4,000 people across 10 different markets in APAC, 70% of them wanted a closer cooperation between cryptocurrency brands, companies, digital assets, and regulators, TradFi institutions, and the companies that they use and interact with every single day already. And then in Australia, 40% of crypto users or considerers, so almost half, said that they would be willing to switch their bank if that other bank offered better crypto financial services. So consumers want this, right? I guess historically crypto was kind of born out of this, sort of like TradFi. It was very sort of oppositional towards traditional finance. That's really no longer the case. They're demanding integration. They want things to be more seamless. They want cooperation. And again, in that is significant opportunity, both for existing incumbent crypto brands, but also for TradFi brands that are looking to enter this space. And many, many are. There's headlines all over the place with MasterCard, Visa, Stripe. I'm sure many of you have seen them already. It's already happening. And so that's, I think, the future over the next few years.
Yeah, I think that's a really good point. I think for myself, even personally, I'm learning, investment in crypto should not be driven by some of your loves. I invested in MuCoin, and I've realized very quickly I probably shouldn't buy on the basis of loving cats, maybe. So that's a little bit of a segue to use cases. So I might throw to you, Dimitri. Which use cases, feel most promising, I guess, in Australia, New Zealand, APAC? I know that's a few regions I've thrown at you, but you can choose one and maybe elaborate on that.
Yeah, absolutely. And to jump on the stats, so if my numbers are correct, I believe out of that 20% of Australians who do own crypto, over 50% actually hold some sort of amount of Bitcoin. And I guess it's our job at Ledn to provide ability for people to do more with their Bitcoin. And that's what we've kind of seen. I think it's been amazing to have feedback from our clients that say, the ability to take a loan in dollars or stable coins against their Bitcoin has allowed them, to put a deposit on an investment property or to pay their medical bills, so to go on a trip while still having the upside and the opportunity to see the appreciation of Bitcoin over time. So it's been quite magical, and I think we've really had a lot of positive feedback from the Australian market who, as I kind of mentioned, see that translation of Bitcoin becoming potentially, the new comparable to gold. And, now they don't have to put all of their savings into property, but then they also have the opportunity to store Bitcoin, but then have the ability to take liquidity on that as well. So.
Yeah, that's. I actually might stay with you, Dimitri, actually on that point, because you were just talking about savings, but I guess stepping out of, consumer for just 1 second. Where do you see signs of maybe small business or cross-border adoption kind of happening?
100%. So I think what's interesting, and we do have businesses that do use Ledn products, is really at the end what we're trying to achieve is to allow people to, in a way, a cash flow management opportunity. So we obviously see this huge in the American market with the likes of Strategy and other treasury companies. Instead of potentially just having cash in a bank account of your business, there is more and more demand to look at holding Bitcoin. And with that, you can then have flexibility to potentially have working capital through taking a loan against your Bitcoin. And that's where the opportunity happens, is you can use, instead of going to the bank and asking for a working capital facility, you could potentially take a loan on that Bitcoin, still see the appreciation of the assets, hopefully at a percentage that's better than the rate that you get at a bank, but you see the value of appreciation with Bitcoin, and you can have the cash flow manage opportunity with that. So we do work with businesses internationally and in Australia is that to allow them to do that.
Yeah, okay. That's a really great take too, I think, Dimitri. I might actually pull in Rachel, just for your opinion on that. I guess even through AUDD, do you see the same use cases that Dimitri was just talking about?
Yeah, absolutely. And I think for a lot of the use cases where we're observing is where the corridors with countries who have really high user adoption. So for example, the Philippines, right? So when you want to pay someone in the Philippines, you might have workers there, then Stables has amazing utility. So AUDD is instantaneous. You can send it. The fees are so minimal relative to like the TradFi industry. And what has I guess we're all commenting upon is that the user adoption on the other side from both aspects are there now. And people want that because they get paid faster. So definitely the same kind of utility, right? It's the efficiency.
Yeah. And then I think I'd love to kind of tap into, I guess, Tommy, with the SwiftX, I guess, from a product or UX, UI perspective. What are your thoughts with this?
I like to think about abstracting the technology layer for customers quite a bit. Our customers, and we speak to customers every single day, they don't actually care most of the time about how the technology works under the hood. They want to press the button and it does the thing, right? So whether that is a crypto-backed loan, whether that is a payments card, like when you tap your card, you don't know what's happening behind the scenes to buy your coffee or buy your beer or whatever it is. I think crypto's had a problem or a barrier for people where we've always talked about blockchain and cross-border, like even just that cross-border or cross-chain transactions. I bet you could go around the room and talk to half the people in the room, they wouldn't really know what that is, and that's totally normal and acceptable, I would say. The reality is we've focused probably too much on that, trying to make ourselves sound more intelligent than we are at times. I think the industry has definitely suffered from a bit of that. It is a nascent industry. We are still pretty early, obviously. From a use case perspective, the customer wants the unlock. They want to think about what can this product do for me in my lifestyle? Dimitri, you've touched on business loans and getting access to property. Australia is obviously obsessed with the property market, and there's some really cool products in the industry coming out around getting access to home loans. I mentioned the spending piece. I think that's, from my perspective, and I think from a business perspective, you want as much daily active use as possible of your product. That's a really good one to connect directly with your users, reward them based on their habits. I touched on, earning Bitcoin back with every tap of your payments card versus Qantas points or Virgin points or anything else. So I guess, getting right into the everyday lifestyle of the customer, focusing on the unlock and what's good for them versus, trying to talk about technology and talking about stable coins and the back end of how it works, because customers really don't care about that. So
100%.
I think that's a good start.
With us, because we're on 7 different chains, it's been quite interesting to see the user behavior across those chains. For example, Stellar is mostly business and so big transaction payments, whereas Ethereum is slightly different again, and so is Solana, etc. So it's quite interesting from the user perspective. There's a bit of decision making from a business point of view as well, from a cost framing. But again, it's as easy as possible, and I think that it's way easier than it ever has been, which is a great thing.
Yeah, okay. Well, on this point, I might actually close off with on the research protocol theory side, on use cases.
I really wanted to do a little exercise here because Tommy made a point that I think is so important. I don't want it to be overlooked, which is that of abstracting away the technology, right? And how we've been stuck in this pattern of we market products, crypto products, or have historically marketed crypto products like we are, technologists as opposed to consumer marketers. let me do a really quick experiment, right? I have 2 products and I'm going to pitch them to you guys. And I actually want the crowd to participate here and put up your hand if you would buy the product that I'm about to pitch you, okay? So the first one, this product number 1, is a layer 2 ZK roll-up, fully EVM compatible blockchain. How many people would be interested in purchasing or adopting or using this product? Just show of hands. Oh, we got one. Got a couple over there. Okay. Product number 2 is it's a payments app that makes things faster, cheaper, more convenient, much more simple, and you're going to save a lot of time and money by using this app by transferring either domestically to your friends and family or internationally to those overseas. Show of hands. Who would buy that product? There you go.
Too many words, but I
Resounding
would buy that
yes.
as well.
Come on, that was off the cuff, man. Exactly the point, right? So that is what we need to see more of in the industry. All this like technical jargon, nobody cares. Consumers do not care about your interoperable, ZK rollup blockchain. They just care about it being simpler, faster, cheaper, more convenient for them. I'll just add one more point, kind of going back to the idea of like use cases and whatnot. We all know stablecoins. They do all of those things, right? They cheaper, faster. All that kind of stuff. Hence, we see widespread adoption of stablecoins, particularly for remittance use cases. But there's another use case and another utility that often gets overlooked, and I think it's arguably the most powerful of all of them, which is that of access, financial inclusion. Not so much here in Australia because we have pretty well-developed financial infrastructure and it's pretty easy to set up a bank account. But for roughly half of the world's population, it is not easy, or they cannot access traditional financial services for various reasons. Digital assets and stable coins, all you need is an internet connection and a wallet address, which is free to create, right? So what it does is it creates opportunities for financial inclusion globally. This is one of the things that motivates me personally and why I started Protocol Theories, because I want to advance that mission of driving financial inclusion. That is, I don't see that get talked about enough, but that if we're talking about utility, what greater utility than enabling half of the world's population to actually participate in the financial ecosystem and create opportunities for themselves. So.
I tell a very quick story about that. About 3 years ago when Bitcoin Lightning Network was kind of kicking off and it was trending and everyone was talking about it, ran an experiment through like Twitter, X now, where we basically we sent like $1 of Bitcoin on Lightning Network and bounced it off every corner of the world, and it came back to my wallet as, I think it was like 99.1 cents, and it all happened, basically bounced off every continent. It went through 12 wallets and arrived back in my, and one of those countries, the reason I say that, Jonathan, one of those countries was like a state in Africa, a country in Africa. I think it was Ethiopia where the wallet was. So we went up around the globe, into Canada, US, Alaska even, I think there was a wallet, and back down to Africa and then back to Australia. So that's kind of the power of that financial inclusion. Somebody down in a country in Africa can actually receive through like the Bitcoin Lightning Network. Just to use an example, you can do it with stable coins as well, of the power of it. Cost pretty much zero. And went around the world in I think in total it took 10 minutes, but it wasn't because the transaction took 10 minutes. It was because people just had to press things on their device.
That utility is also what got me really interested in the space. So that was what initially why I gravitated towards it. It's just absolutely phenomenal, and I think was one of the reasons why I think that Australia has been slightly behind the curve, because in like the Asia Pacific region, right, the acceleration has been incredible. And I think that we're slowly getting there. We're picking up on it, but the opportunity cost wasn't as high for us. So yeah, that utility is absolutely amazing.
That's awesome, Tommy. That's a really cool story.
So if I can add to that as well. So it's interesting because we do forget in Australia how good the life is here and how, in many ways the government does have your best interest. So one of the idea, and one of the Ledn's co-founders actually grew up in Venezuela, so he saw firsthand how when a government doesn't have your best interest, what happens. And I think it's one of the things we're trying to achieve at Ledn is to give people opportunity around the world to be able to receive credit and to take loans. because instead of being able to look at your credit history and take a credit card, if Bitcoin is Bitcoin. So technically, if we have Bitcoin, we can issue a loan, which provides a lot of more financial opportunities for people, countries that are less privileged than Australia.
Awesome, guys. That was really cool, by the way, the way you guys were bouncing off each other. I could have just sat and listened to it the entire time. But I will move on to the next question. And I think this one, the crowd can really potentially, take something away from this too. But what holds users back today? That's such a simple question, but what do you guys think holds the users back today? And moving forward, I guess. And I can see people pulling up their mics. So Rachel, I'll start with you from that side.
My one's knowledge. There's still a lot of, I feel like, again, I'm a bit of a silo. Everyone I talk to and interact with knows what's going on. I go to a family wedding and I'm not the most popular person at the table. They're like, oh, what's that? Is that fraud? I'm not sure about that, So I think from where I can see there's still so much to kind of come is that the education point. So the utility is there, but it's just kind of getting the knowledge out. And I think that we've caught up from a product standpoint. So everything's kind of in place, and it's just education now. That's what's the hold up at the moment.
I like that. I might pull in some research support on this one. There you go. So protocol theory. Jonathan, what are your thoughts on that?
I guess there's two segments that we would look at, right? So there's those that haven't yet adopted crypto, so what we might call non-users. And then those that have already adopted crypto and kind of what holds them back from things like stablecoins and crypto-backed lending products. On the first one, it's all the things you would probably imagine. It's a bit of education. Interestingly enough, and that probably gets cited as the most, I guess, prominent reason that holds people back from engaging with cryptocurrency generally. But it's we've done a lot of work in that space, and it's education plays less of a role than you might think. It's don't get me wrong, it's still very, very important, but it's typically perceptions around volatility and risk and scams and this sort of thing that really prevents people from kind of getting into crypto in the first place. Most crypto holders today, they skew younger, right? And that's probably not a surprise. Most crypto holders tend to be kind of between the ages of 18 and about 49 years old. Those 50 and above are much more hesitant they tend to be a bit more risk averse in general. And so they're just a bit more and less sort of often less comfortable with like innovative emerging technologies that it's not fully fleshed out, like how these things all work, and it's all very unclear. So definitely perceptions of scams and risk and whatnot. Really interestingly, so here in Australia, for example, when we've done research on this, again, scam perceptions was I think even the single largest or most important barrier to adopting crypto. Was perceptions of scams. Cryptocurrency is very scammy. If I get into crypto, I'm going to get scammed. But then when we ask crypto users, have you been a victim of a scam, or do you know anybody that's been a victim of a scam? You know what the answer was? It was around about 10%, I think, and it was less common than those, if you just ask a general population audience, if they've been a victim of a scam in any kind of traditional financial services, context, it was less common than that. So this whole perception of crypto as this, scam-laden, space is actually quite misaligned with reality. And then in terms of cryptocurrency users to stablecoin usage and crypto-backed lending, for stablecoins, it tends to be either they just don't have a need for one, or where there is a clear need, they tend to adopt, like in emerging markets where it's for remittances. But access is something that comes up quite a lot. So either they don't really know how to do it, or when we say access, it's also just the technicality of it. It goes back to the language that we're using to explain it. And they have to transfer from this wallet to that wallet and then purchase that USDC. But what network is that USDC on? It can all be a little bit confusing. So that's one barrier for crypto users. And then for crypto-backed lending products, it tends to be just level of understanding of how these products work and level of comfort with them. Australians in general, we're very comfortable with traditional financial products and lending products in general. We have very large mortgages. But when it comes to the collateralized lending and what's going to happen to my Bitcoin if I default or if it falls a certain amount, they just don't fully understand the complexities of all of that. And so there's a big education piece around that to bring that level of comfort to those users.
Yeah,
Go for it, Dimitri.
I would add it's interesting because I think now and over the next couple of years we're going to see a lot more policies and governments establishing frameworks in international markets that will give a lot more people, companies, and service providers in the space more comfort. I would say the next place as well is education, but I would almost say education within traditional service providers, whether that's auditors or accountants and lawyers that can then spend more time providing a stamp of approval in some of those crypto companies that will then give more sense of security to consumers. And then I think finally just more and more investment into security, because realistically, my opinion is that hacking will continue to evolve more and more, and the more you can spend money and provide security across those areas will provide again more comfort to consumers. And finally, I think the point around user friendliness, the UX of the products, even though there's so much innovation and technology happening, I think the next stage of innovation should be how can users, realistically, hopefully within a few clicks, be able to get exposure to the same products, investments, and opportunities as you can in traditional finance. So I think the world is evolving in that space, and hopefully the more time people spend and the more clean track records you have for operating over years as a business, you build more trust amongst consumers to participate in this ecosystem.
That is so eloquently put. Now I've seen two mics come up, but I'll throw to Rachel for a second. Go for it, Rachel.
I guess I would say that some of the people who kind of interact with us wouldn't even know it, because they deposit AUD, Australian dollars, and then the back end is just a payment rail, right? So it's all abstracted away. So that's such a good customer experience because of the speed and efficiency, but you don't actually need to know the technology that you're operating on.
Yeah, and I think, did you want to add to that, Jonathan, before I asked?
I was going to add another point, but just to build on Rachel's point there, I flew here from Melbourne, right? I got on a plane and I flew here from Melbourne. I don't know the first thing about aerodynamic lift or the mechanics of how an airplane works. I just know that I'm going to get from A to B, right? And I want to get there as comfortably as possible. It's the same thing with all of these products and with cryptocurrency generally. Consumers do not care. They don't want to know. And they don't want to spend the time trying to learn all the underlying mechanics. They need to learn how. That's the difference, right? They need to learn how these products work and how to use them effectively, but not necessarily what's under the hood. That's a very different thing. And just I wanted to share a quick anecdote around the complexity of the Bitcoin-backed sort of lending products and crypto-backed lending products. I always feel a little bit embarrassed to say this, but in a past life, prior to market research and consumer insight, I was actually a financial planner. Right? And so I was very well versed in I don't know if I see someone laughing there in the background, if you're yawning, but feel free to laugh. But I was very well versed in financial products, and I still am, right? So it's something that I have a bit of expertise in. And I'm a user of crypto-backed lending products. I have used them to help grow the company, our business, Protocol Theory, as a liquidity and source of working capital. When I first signed up adopted this product and signed up for it, the amount of time I spent on the phone with the sales rep asking all of the questions, like what happens if this happens, or how does, trying to understand all the nuances and complexities of it. It was a fair amount to wrap my head around, right? And this is someone that has previous financial planning experience and a deep knowledge of these types of products in general. And I've been in the crypto space for a long time. And even for me, it was a bit of a learning curve, right? So that highlights the challenge with trying to communicate the benefits and the use cases of these products to, I guess, mainstream kind of general, audiences. But the benefits, for me at least, and I'm sure that you would verify with your other customers, the benefits of these types of products are significant when used appropriately.
Okay, I like that. Now, we're on time, guys. So I do need to ask this really last riveting question because it's really exciting, I think so. Predictions. So what's one change you guys expect to see in the next 2 years, and would love to hear an opinion from each and every one of you. So we can start with Dimitri. Maybe we'll start from this side.
One change. I think what makes sense to me anyway is that I feel like there's been and there are a lot of amazing minds in the industry that have built incredible products. But what I find, and the people that I speak to, is that that doesn't translate very well to explaining it to users who might not have that background. And what happens is that complexity that commingles, and it kind of creates this place where people don't want to participate because they don't understand it. So I think the more conversations, the more adoptions, the more clarity. Hopefully what will happen is that all of this amazing complexity and innovation that happen will start being simplified so people are more comfortable to participate in loans, to participate in stablecoins, to do several investments. And hopefully that just gives people more comfort to be in this ecosystem, because the goal really at the end of the day to provide more power and financial power to everyday people that might have not had that before. So, and yeah, I think we're already seeing that internationally. So kind of user friendliness and adoption, that doesn't mean that you have to have a, software engineering degree to understand the complexities of the networks.
Love that. And Jonathan, you're up next.
So it's key themes in the next few years.
Yeah.
I would summarize them in 2 words: integration and invisibility. I've already kind of alluded to both of those things, but I think what we're going to see is further integration with, I guess, the digital asset and decentralized finance ecosystem with traditional finances, the traditional financial services system. And invisibility is basically everything that Rachel has already alluded to. We need to make the whole experience invisible to consumers, so they don't even know that they're interacting with stablecoins or digital assets. It's just faster, cheaper, easier, more convenient payments.
Tommy, your turn.
It's going to be a little bit of a boring one, but I don't have enough fingers to count the amount of Treasury consultations I've been part of in the last 7 years. And for people that don't know, basically the government have been working with the exchanges and a lot of the industry to try and develop fit-for-purpose regulations and create framework to protect you guys and protect all of us that interact with the asset class. So my kind of prediction is that in the next 2 years, we will finally get the framework and the regs that we want. And why that's important is it unlocks a massive opportunity for the whole industry, for people that would never before get involved until we actually have this. So while the number it fluctuates between 20 and 25% of adoption of crypto in Australia today, that number is predicted to easily double with the advancements of fit-for-purpose regulation. So I agree with the guys' points about UX, abstracting out the technology. All those pieces will just get better and better. If they don't, I might not be in the job in 2 years. But I think they're really focusing on the product, the user experience. You add regulation on top of that. It's like a perfect storm for adoption, in my opinion.
Yeah, I agree. It's going to be part of our daily lives, right? So I think that in 2 years' time, it would be a majority of the payment rails networks that we're operating on. A lot might not know if that's the case. I think we'll continue to see a change in value relating to money and currency. So I think that Bitcoin will continue to have relevance, presence. Stables will also be a larger part of your kind of financial planning and how you look at your finances. And what I really hope as well is that we get some of the utility relating to blockchain in general. So some of that programmability aspect, I think that is a really exciting space and opportunity, because stables is an infrastructure, right? So AUDD can be used in so many different business ways, from smart contracts facilitating a lot of that. So I'm really excited to see it adopted in that utility framing as a general technology.
Awesome. Thank you,
I
Rachel.
think I just want to add, I think what kind of makes sense to me is that, we've seen the internet boom in the start of 2000s. We've seen this innovation and technological progression. To me personally, I think it makes sense that, of course, there's going to be the future of internet money. And I think that's the way that we're going, is just more quicker, more reliable, more verifiable, and be able to give everyone more opportunity to hopefully have a better experience in the future overall.
Awesome. Thank you, Dimitri. I think we have a few minutes left, so I would love to throw to the audience if we have maybe 1 or 2 questions at most. If anyone kind of do have questions. Okay, we do. I might do the tricky thing of running down the stage and bringing the mic. So we've got 1 question on the left. Anybody else have any questions? Perfect. That is great. Let me just kind of run.
Another area that I think, just while we're getting the microphone down, that I think we don't talk about enough is acceptance, general acceptance. So there's many products that exist today. It hasn't quite had the cut through in the market yet. For example, I go to Qantas to book my flight. I want to pay in Bitcoin. So I think those kind of products as well are things that are going to be very prominent in the next 2 years. I think you'll always have an option to pay in a stable coin like AUDD. You can pay in Bitcoin or whatever your kind of currency of choice is. That's something we don't see kind of more prevalent in the market today. I think that's something that is, again, going to be a huge unlock for the asset class in general.
Hi. Oh, sorry. This is, I guess, maybe to Dimitri, but anyone in the panel. Within Australia and I guess across the US and a lot of other spaces, the larger banks and the second-tier banks dominate the lending and money supply space within the economy and have huge amounts of scale. As legislation changes throughout the world and those organizations are able to lend based on other cryptocurrencies, Bitcoin, whatever, how do you think lenders like Ledn and other financial institutions which are coming up now are going to be competitive in that space? And I guess to a second point in that, do you see those larger organizations purchasing, from an M&A standpoint, smaller organizations to be part of that? Or do you see a different kind of way of moving just because of the dominance of those banks as it stands now in Australia, the US, and in Europe?
So I think it's interesting because my take is there might be a lot of negative sentiment, traditional finance regulators, but at the end of the day, I do feel safe that my, bank is in a way a slow adopter to the industry. Let's test this, let's take our time, let's make sure that, we know how to protect the system. I don't think in any way we try to replace the banks. I think being small and being nimble, you have the opportunity to innovate and provide new products and things that maybe just like in any bureaucratic institution you can't do. And so what we already having and seeing right now is that there's just more dialogue and there's more openness from banks internationally to be able to work and to be able to have conversations and to explore different ways to work together. Do we think that maybe 5 to 10 years similar products will be able to be in the big four and other banks? Probably, yeah, 100%. But just like, you look at the landscape in the US, there's big banks, there's community banks, there's credit card providers. That doesn't necessarily mean that two can't coexist and to hopefully provide a range of different financial opportunities, which in more cooperation actually creates a better user experience to people. So I think, from my perspective, let's have dialogue, let's debate, and let's find a way to hopefully create a better financial opportunities to as many people as possible.
I would agree. It's going to come down to that user experience. That's what will bring consumers either to your platform or away from your platform. So if banks don't keep up, then they will be overtaken. But it will also mean that we have to innovate fast and keep providing value to our consumers with our innovation. I think the other lens is that you might start to see a bit of a sovereign state angle. So there might be some regulation that looks at the geopolitical implications of having a large part of your commerce offshore to the US and what that might mean for different nation states.
I might take that cue to come back up on stage. I'm sorry, guys. We're going to do this thing. I'm going to walk right across the speakers. Thank you. And that really closes our time. Thank you so much, really, for our speakers for the insights and examples today. We know we covered early demand signals, emerging use cases, consumer motivations, and opportunities to make these tools more accessible. And it's also very much evidence-led. Thank you to Protocol Theory as well. So thank you so much for your time, you guys. And I hope the audience has enjoyed. I hope you guys close off today with the best day ever at Australian CryptoCon. Thank you.
Thanks, everybody.